You just can't get away from it, can you? It feels like every single conversation is about artificial intelligence. A massive, absolute tidal wave of capital, we're talking hundreds of billions of dollars, is flooding into this space. It's rewriting everything. But with all this hype, all this money, comes a huge, unavoidable question. So, what is really going on here? Are we at the dawn of a new economic era, a genuine technological breakthrough that's going to change our lives forever? Or are we just stuck in another speculative frenzy, a sequel to the dot-com bust of the late 90s? You know, it's the debate right now, and the answer is going to shape the next decade for all of us. And get this, the warnings aren't just coming from the usual skeptics on the sidelines. That quote, that's from Sam Altman, the CEO of OpenAI, the company at the dead center of this whole revolution. I mean, when the guy building the rocket ship tells you to be careful, you really got to pay attention. So, here's what we're going to do today. We're going to really unpack this whole thing. We'll kick things off with the bubble debate itself. Then we're going to go deeper into the physical reality of AI, what some are calling a business of atoms. After that, we'll look at how Wall Street is trying to tokenize this revolution, face the serious dilemma this creates for investors, and then we'll wrap up with a solid framework for how to think about this crazy new frontier. All right, first up, the bubble debates. Let's look at the actual evidence that has so many seasoned investors feeling this serious sense of déjà vu, taking them right back to the turn of the millennium. Wow, okay, this slide really just lays it all out, doesn't it? The CAPE ratio, which is basically a way to measure if the market's overvalued, is hitting highs we literally haven't seen since the peak of the dot-com bubble. And just look at OpenAI. It was recently valued at an eye-watering $500 billion. That's off of about $10 billion in revenue, while it was still losing money. Sure, back in the 90s, companies had zero revenue, but that massive gap between valuation and actual performance, it feels eerily familiar. And it's not just the crazy valuations. You've got huge institutions like the IMF and the Bank of England waving red flags. Then there's this weird kind of incestuous financing loop going on. It's where a giant like Microsoft pumps billions into OpenAI, and then OpenAI turns around and uses that same cash to buy cloud services from, yep, you guessed it, Microsoft. And to top it off, you have guys like Michael Burry from The Big Short, who are now betting against some of these key AI companies. The warning signs are definitely there. Okay, but here's where the story gets way more complicated and honestly, a lot more interesting. To really get what's happening in the AI economy, we have to look past the software, past the algorithms, and see the massive physical world that it all relies on. We all kind of think of AI as this weightless, magical thing, right? Just code floating around in the cloud. But the reality? Oh, it's so much grittier. It is fundamentally a business of atoms. For this AI revolution to actually work, it needs a physical build-out on a scale we've never seen before. We're talking about new power grids, unbelievable amounts of water just for cooling data centers, and specialized construction to build these high-tech fortresses. This isn't just happening on a screen, it's happening in the dirt. And the type of physical build-out is changing too. This is a really crucial point, the shift from training to inference. So think about it like this. The first huge wave of money went into training the models, basically sending the AI to college to learn about the world. But the next wave of capital, which is probably going to be even bigger, is for inference. That's when the AI graduates and gets a job in the real world, diagnosing problems on a factory floor, managing a supply chain, driving a car. And that requires a totally different kind of physical setup. Now, this new infrastructure isn't just one big thing. It's really more like a three-layered system. First, you've got the cloud, which provides the massive computing power needed for that initial training. But then, for the day-to-day work, a lot of companies are building their own on-premise data centers because it's just cheaper for high-volume tasks. And finally, you have all the edge devices, your phone, a sensor in a car, that need to process stuff instantly, right here and now. Each layer has its own unique physical needs. And this brings us to the picks and shovels of this new gold rush. Instead of just betting on the AI models themselves, the gold miners, a lot of smart money is looking at the companies selling the equipment. We're talking about thermal management companies like Vertiv that make these crazy liquid cooling systems for the chips, networking companies like Arista that build the high-speed fiber backbones, and even industrial firms like EMCOR that are physically building these facilities. This is the real, tangible backbone of the AI economy. All right, so if you thought a potential market bubble and a massive industrial build-out were a lot to get your head around, well, buckle up, because now we're adding another layer of crazy complexity, the world of crypto and blockchain. This is where Wall Street gets its hands on AI and things get really wild. Okay, let's get this straight because this is super important. A tokenized stock is not the stock. It's not like owning a share of Apple. Think of it as a contract, a derivative that lives on the blockchain. Its value is designed to mirror the underlying stock, but it's not the real thing. You don't get ownership, you don't get voting rights, you're basically holding an IOU. So, how does this actually work in practice? Let's take a look at the Robinhood model. You, the investor, buy an OpenAI token from them. Robinhood then creates, or mints, a brand new token for you on the Arbitrum blockchain. At the same time, they take your cash and go buy the actual private stock to hedge their bet. When you want to sell, you sell the token back to Robinhood. They destroy it and give you your cash. The key thing here is you can never trade your token for the actual stock. It's a closed loop. And here's where it gets really juicy. How did OpenAI feel about their company being tokenized? Well, they immediately jumped on Twitter and publicly said, hey, we have nothing to do with these tokens and we absolutely do not endorse them. This just perfectly captures the tension here. You have a situation where you can invest in a product based on a company that explicitly does not want you to. It's a total gray area. So you put it all together, a potentially overheated market, a massively complex physical reality, and now these exotic, newfangled financial products. It all leads us right here to the investor's dilemma. We are navigating a minefield of extreme risk and just total uncertainty. First, just think about the sheer scale of the bet being made here. The latest estimates show that annual spending on AI infrastructure is blowing past $2 trillion. Let that sink in. That is an almost unimaginable amount of money being poured into this ecosystem, all banking on the promise of future returns. But, and this is a huge but, here's the other side of that $2 trillion coin. According to Vanguard, one of the biggest investment managers on the planet, there's a 25 to 30% chance that AI completely fails to deliver the economic boom that everyone's expecting. If that happens, well, today's valuations are just not sustainable, and all that spending could lead to some truly staggering losses. That's the big picture risk. Now let's drill down into the micro risk, especially with those tokenized stocks. When you buy one, you're not just taking on one type of risk, you're stacking them up. First, the underlying stock itself could just go down. Second, you've got blockchain risk. Your whole investment relies on the Ethereum and Arbitrum networks not getting hacked or failing. Third, and this is a big one, is counterparty risk. Your token is just a promise from Robinhood. If they go under, your token could be worthless. And finally, there's regulatory risk. These things don't have the investor protections you're used to, like deposit insurance. It's risk on top of risk on top of risk. So, faced with all this hype, all this complexity and risk, what do? Do you just run for the hills? Absolutely not. You apply a framework. You fall back on timeless, disciplined principles to help you navigate this new, chaotic technological frontier. This right here, this is maybe the most important takeaway of all. When some new technology comes along and promises to change the world, the fundamental questions you need to ask yourself don't actually change. In a world full of AI-generated noise, a disciplined human process becomes your best tool. And a really solid way to structure that process is using these 4 pillars. Number 1, fundamental analysis. Is this company actually worth its price tag based on the numbers? Number 2, technical analysis. What's the market sentiment? What story is the chart telling you? 3, position sizing. How much are you actually willing to risk in such a volatile area? And 4, risk management. You have to know your exit plan before you even get in. It doesn't matter if you're looking at a stock or a token, these pillars keep you grounded. And all of this leads to a really powerful idea. In a world that is changing this fast, where technology is just accelerating like crazy, the most valuable asset you can own isn't a stock, it's not Bitcoin, it's not a token, it's knowledge. It's your ability to learn, to adapt, to apply a disciplined framework. Your financial education is just huge. So, I'll just leave you with this question. As we're all standing here at this AI crossroads with both incredible opportunity and frankly terrifying risk in front of us, is it possible that the single best investment we can make isn't in any one company, but in our own understanding? Maybe financial education is the real pick and shovel for whatever frontier comes next. Something to think about. Thanks for joining.